Hey guys, welcome to another video and thanks for clicking on this one. So in this video, let's talk about what happened today in regards to the Fed's rate cut. One of the things that we knew prior to this day was that they would cut rates, and we were anticipating that they would cut it by around 25 basis points, which comes out to be a quarter percent. And those were already known facts that that was out there, and that was already baked into the market in terms of price appreciation, the stocks going up and all that. But here's something that we didn't know, and that is what the Fed is likely to do going forward regarding future cuts and the things that it would say regarding the economy. In today's meeting, and of course the briefing that he gave, he shared that they took a risk management approach because of the labor market. Specifically, we know that the PCE, CPI, all that are still going higher due to the fact that these tariffs are slowly trickling in to the prices of goods and services being provided. But the labor market is seeing a downward pressure from different areas, right? And jobs are definitely not looking good. Hence the reason why they've decided to do this quarter percent cut, or at least 25% basis cut. Now with that, where does that put us? That puts us in this situation where they have to then rely on new numbers going forward to decide on what they should do regarding future cuts. According to what they've shared now, they are predicting or projecting that they will do 2 more cuts, and most likely do a quarter basis cut, quarter percent cut in October, and maybe another one in December, right? But we don't know if that is going to hold, because it all depends on the data that comes out in the coming weeks. We're talking about CPI, PPI, we're talking about jobs report. Those numbers will tell us where we need to go with this cut, according to the Fed. Now, here is where we find ourselves as people who put our money in the stock market, and you're trying to figure out where do you put most of your money. According to data out there, there is about $7 trillion, if I remember correctly, of cash that is sitting in money market accounts. 7 trillion. If I can find the article, I'll put it up, of cash sitting in money market accounts, which means that the stock market has a lot of potential to go higher in the near term. However, of course, this report is settling in because the stock market closed. So we have the Dow Jones closed about 250 points higher. We have the S&P down about 0.1% down, all right, so about 6 points lower. And of course, the NASDAQ down around 72 points, or about 0.33%. These numbers are nothing to worry about, because this actually did what is expected, in my opinion. We knew that it would be a rate cut. We knew that there's going to be about, I think, 75% chance that it will be a quarter percent basis cut, quarter percent cut. And all of this was already known. So the stock market reacting and seeing this is actually good news, in my opinion, because that means the Wall Street, right, didn't really see a lot of negative, I would say, deduction. They didn't deduce a lot of negative stuff from what the Fed has said, which is a good thing, because that means that as long as there's no drastic change from the policies coming from the Trump's administration, I believe that this is a good thing, which means the stock market can take this as a new, stage to even go higher. And that is what I am seeing. That is what I'm expecting. Now, of course, we need to wait on this new economic data that will be coming out in a few weeks. We need to see the jobs report again to see what the trend is like. All those becomes more important as we trade towards the end of the year. The other important thing to keep in mind is that inflation is still a problem. And one of the questions I was asked by some of the reporters there was, considering this 2% inflation target hasn't been reached in the past 4 or 5 years now, and now they're projecting that their 2% should be able to reach their target by 2027, 2028. That isn't this obvious that this 2% target isn't realistic? And the response was, that is the goal, right, of the Feds. It doesn't mean that they have to hit the target. It's all about balancing employment and inflation. So the goal here is that, yes, the 2% is a target. They will continue to work towards it, but that doesn't mean that they would hit the target, because things would change, policies would change. And as long as those policies keeps, affecting goods prices and services, and of course employment keeps changing, they would have to make adjustments. And what they are seeing now is that both employment and both jobs are lower. So that means hiring and firing of people is actually quite stagnant. And the Feds talked about immigration being a factor in all of this, considering that a lot of people have been scared to even go to work, and some have been taken off their jobs. So we don't have a lot of productivity coming out, so GDP is down. And of course, we still have employers worried about the state of the economy, so they're not really hiring, they're not really taking on people, they're not spending as much. So both this side are down, which is not really what the Fed would normally see. It's always something is a little hot, and then they try to bring it down, and the other one goes up. It's like a seesaw motion. So all of that to say that we have this situation at hand that we are depending on the future data. We don't know what that will look like. We don't know what's going to happen. But one thing I would say is, when it comes to investing, what's your goal? What are the things you're working towards? Right? If you have a target to reach a certain amount in your investment account, how are you doing? Those are the things that we can control. And that means that we continue to steadily invest when the market is, gives us the option to. Like today, this type of reaction, this type of numbers at the end of the stock trading day, after a major decision was announced by the Fed, I think is a good thing. This is setting the stage for the next run that I believe could happen. All right. I just wanted to share this information with you. If you have found value in this video, don't forget to drop a like on it. Don't forget to subscribe to the channel, of course. And remember, investing involves risk. The goal is to set a long-term mindset in this process, so that you're not trying to chase the little things, because today you couldn't have predicted what will happen, right? Based on what the Fed would say, the outcome of the meeting, the decisions they announce, things like that. So it's okay to realize that, it's best to have a long-term mindset, have a long-term goal, and invest based on the time horizon you have. Just wanted to share this with you. If you found value in it, please don't forget to drop a like on it. I'll see you in the future one.